The new energy map: how a disrupted Strait of Hormuz could reshape the world for decades. The Strait of Hormuz has functioned as one of the most critical arteries in the global economy, a narrow passage through which a fifth of the world's oil supply flows. It has always been a point of vulnerability, but in a world of rising geopolitical tension, its importance is no longer just economic, it's strategic. If disruptions in the strait become recurring rather than rare, the consequences won't just be temporary price spikes, they will fundamentally reshape how power, trade, and energy flow across the globe over the next 5 to 10 years. The end of cheap stability globalization was built on a simple assumption: energy would remain relatively cheap and reliably accessible. A prolonged disruption in Hormuz breaks that assumption. In the short term, oil prices spike. In the long term, something more profound happens. Countries begin reorganizing their economies not for efficiency, but for resilience. This shift marks the beginning of a new era. Less reliance on fragile choke points, regional supply chains, a permanent risk premium baked into energy markets. America's strategic position strengthens. The United States enters this new era with a major advantage. As the world's largest oil producer and a net energy exporter, it is less dependent on overseas supply routes than most major economies. High oil prices, especially in the $120 to $150 range, unlock massive profitability in U.S. shale production, Canadian oil sands, offshore drilling across the Americas. This doesn't make the U.S. immune to global shocks. Gas prices still rise, and inflation still hits consumers. But relatively speaking, the U.S. becomes more stable and more influential. Over time, this positions North and South America as a parallel energy hub, reducing the world's dependence on the Middle East. China, from vulnerability to adaptation. At first glance, China appears highly exposed. It imports the majority of its oil, much of it historically passing through Hormuz. Rising prices and disrupted shipping routes create immediate economic pressure. But China is not static. Faced with sustained disruption, it accelerates long-term strategies already in motion, expanding overland energy pipelines from Russia and Central Asia, locking in long-term supply contracts outside the Gulf, rapidly scaling electric vehicles and renewable energy, building trade corridors that bypass maritime choke points. The result is not collapse but transformation. China becomes less dependent on global oil markets and more internally resilient, even if growth slows in the process. The Middle East, still powerful, but no longer untouchable. It's tempting to assume that instability in Hormuz weakens Gulf states across the board. The reality is more nuanced. Countries like Saudi Arabia and United Arab Emirates face real logistical challenges if exports are disrupted. But they also benefit from one critical factor: higher global prices. Even with constrained volumes, elevated oil prices can sustain or even increase revenues. Meanwhile, these countries are already adapting, investing in pipelines that bypass Hormuz, diversifying into finance, tourism, and technology, strengthening economic ties with Asian markets. They don't disappear from the global stage, but their role evolves. From being indispensable suppliers, they become one of several major energy centers. The rise of energy blocs. Over time, the global system begins to reorganize into regional energy blocs. The Americas, led by the US, Canada, and potentially Venezuela, acting as a major export hub. Eurasia, Russia and Central Asia supplying China and neighboring economies via land routes. Middle East, still influential, but increasingly competing with alternative suppliers. This fragmentation marks a departure from a single, tightly interconnected global market toward a more multipolar energy system. The unexpected catalyst: the energy transition. Ironically, prolonged high oil prices may accelerate the very trend that threatens oil's dominance. When energy becomes expensive and volatile, electric vehicles become more attractive. Nuclear energy gains political support. Renewable infrastructure scales faster. What begins as a fossil fuel crisis could ultimately reduce long-term dependence on fossil fuels altogether. Winners, losers, and the bigger picture in this new landscape. Outcomes are relative. Stronger positions: energy exporters in the Americas, countries investing in electrification and energy independence. Challenged positions: energy importing nations with limited domestic supply economies, heavily reliant on global shipping efficiency, but the most important shift isn't about any one country winning or losing. It's about the rules of the system changing.